Welcome back to Talk Tickers. Today, we're going to be looking at MSC Industrial's first quarter 2025 earnings call.
Ticker symbol MSM.
Yeah, MSM.
Yeah.
And, they're kind of a bellwether for the industrial supply space. And we're going to try to unpack, what their results tell us about the company, but also, maybe about the broader economy as well.
Yeah, and I think one of the things that's really interesting right off the bat is that they managed to exceed revenue expectations, even though the overall manufacturing sector is, kind of at a bit of a slump right now.
Right.
So that suggests that, some of their strategic initiatives, particularly around government contracts and those kind of customized solutions that they've been working on for businesses are starting to gain some traction.
Okay, so let's unpack these numbers a little bit because on the surface, sales being down isn't exactly, a cause for celebration.
Right, but context is key.
Yeah.
So their average daily sales were down 2.7% year over year.
Okay.
Which, again, not fantastic. But their guidance that they had previously provided was for a decline of 4.5% to 5.5%.
Oh, okay.
Beating your own forecast in a tough environment, that's worth noting.
So how did they manage to pull that off? Was it just one area outperforming, or is this kind of a broader trend across their business?
It's a mix of factors.
Okay.
First of all, their public sector sales were up almost 10%.
Okay.
That's a sign that they're really, making headway in landing those government contracts.
Right.
Then you've got their solutions business, which is really all about creating those customized programs for companies like managing their on-site inventory or setting up those specialized vending machines for their parts.
Yeah.
And that segment was up 5%.
Okay.
And then finally, they had a surprisingly strong November, even returning to growth for the month.
Oh, wow.
So that's
interesting.
A little bit of an outlier.
So what drove that November jump?
Partly it was some large orders coming through, and partly it was just a calendar quirk with the holidays. But even taking that into account, it's a positive sign.
So it sounds like kind of a mixed bag, but with some definite bright spots.
Yeah.
Now, I know they've been talking a lot about this mission critical program of theirs.
Yes.
Can you give our listeners kind of a quick rundown of what that's all about?
Yeah, so Mission Critical is essentially their three-pronged attack to revitalize growth and grab more market share.
Right.
First, they're really laser focused on those solutions that I just mentioned, getting deeper into those in-plant programs and installing more vending machines at customer locations.
It's like almost becoming kind of a more integrated part of their clients' operations.
Exactly.
Not just a supplier.
That's a great way to put it.
Yeah.
The second piece is what they're calling re-energizing their core customer base.
Okay.
And this is really about, improving their main website, mscdirect.com, so it's easier to use and navigate.
Right.
They've even created a digital version of their famous Big Book catalog, which I'm sure many of our listeners are familiar with.
Oh, yeah, the Big Book. It's like the Sears catalog of the industrial world.
Exactly.
Okay.
And they're also making efforts to optimize their sales force, making sure that they're reaching as many potential customers as possible.
Makes sense.
And then finally, the third pillar of Mission Critical is focused on accelerating their OEM category.
Okay.
So this means they're trying to cross-sell more fasteners and other products that end up in finished goods.
Okay, so thinking bigger picture, is this Mission Critical program showing promise, or is it too early to tell?
I mean, it's still early days, but the initial results are encouraging.
Okay.
For example, their in-plant programs have seen a 29% increase in sales.
Wow.
Which is, pretty impressive considering the broader economic context.
Yeah, it's like they're building a stronger engine while the car is still running.
Yeah.
Like you said earlier.
Exactly.
But let's be honest, there are some headwinds they can't ignore.
Absolutely.
Right.
The manufacturing sector is undeniably soft right now. A lot of their key end markets, like automotive, heavy truck, and metals, those are contracting.
Right.
And that's not something they can just wish away.
And then there's that December sales dip we touched on earlier.
Right.
A whole 8% down year over year. Should listeners be worried about that?
Not necessarily. Remember, a big chunk of that decline is due to the way the holidays fell this year.
Right.
New Year's Day landing midweek really kind of messed with their final sales week in December.
So if we kind of look past the December quirk, are things less gloomy?
Exactly. And I think that's what's really interesting here is that if you look at January and February, stripping away that December distortion, the underlying trends actually look pretty similar to that, positive momentum that we saw in the first quarter overall.
Okay.
So, they're not out of the woods yet.
Right.
But it's not all doom and gloom either.
Some reasons to be cautiously optimistic.
Yeah.
But we need to keep an eye on those broader economic trends. Now, before we move on to kind of the detailed financials, I have to ask, did their much touted Made in America focus play any role in these results?
It's a bit hard to isolate the direct impact,
Right.
but, it's definitely part of their brand narrative. And with all the talk about reshoring and, supply chain resilience, it could become even more important going forward.
So let's see how that plays out. Now, let's get into the specific financial numbers for our listeners who love the nitty-gritty.
Right.
What did their revenue come in at for the quarter?
They reported revenue of $928 million.
Okay, so down 2.7% year over year.
That's right.
Like we said, but still beating expectations. And what about profitability? Give us the rundown on those key margins.
So their gross margin came in at 40.7%.
Okay.
Right in line with what analysts were expecting.
Yeah.
But where they really shined was operating margin. And remember, this is a key measure of how efficiently they're running their business.
Right.
It landed at 8%, which actually exceeded expectations.
Wow.
Suggesting that, they're really keeping those costs under control.
So disciplined operations in a tough environment.
Yeah.
That's a good sign. Anything else we should highlight before we move on?
Yeah, their free cash flow was particularly strong this quarter, converting at 179% of net income.
Okay.
So basically what that means is that they're turning profits into cash very effectively,
Right.
which gives them flexibility to invest in growth, buy back stock, or even pay dividends.
Always good to have options.
Exactly.
Okay, so that's a solid overview of the numbers.
Yeah.
But what does all this mean for our listeners who are thinking about investing in MSM?
Right.
Should they be excited, cautious, or running for the hills?
That's the big question.
That's the big question. We'll tackle that and more when we come back for part 2 of this deep dive,
Sounds good.
right after this break.
I'm looking forward to it.
Me too.
All right.
Okay.
See you then. Welcome back to Talk Tickers.
So we left off talking about their financial performance, but, earnings calls aren't just about the numbers, right? The Q&A section where analysts get to kind of grill the executives often reveals a lot about the company's strategy and the challenges that they're facing.
For sure.
So what were some of the key questions that came up this time around?
Well, one of the big ones was around operating expenses.
Okay.
With revenue growth slowing, investors want reassurance that MSM can maintain profitability
Right.
by keeping costs under control.
Right.
It's a valid concern in this environment.
Like asking, can you tighten your belt without choking the business?
Exactly.
Yeah.
So how did MSM respond to those cost concerns?
Yeah.
Well, their CFO, Kristen Actis-Grande, was very direct in addressing it.
Okay.
She highlighted several initiatives that they're undertaking to boost productivity and cut costs.
So give us some specifics. What kind of cost-cutting measures are we talking about?
Well, they're streamlining their supply chain.
Okay.
They're getting smarter about inventory management.
Ugh.
And they're implementing various cost-saving measures across their distribution network. So think of it as, fine-tuning the machine to squeeze out more efficiency.
That makes sense. Less waste, leaner operations, all that good stuff.
Exactly.
But investors are always wary of cost-cutting that ends up hurting the business in the long run.
Right.
Did they address that?
Yes, absolutely. And, the message was very much that these are strategic moves, not just slashing for the sake of slashing.
All right.
They expect these initiatives to lead to significant savings, which will help protect their margins, even if revenue growth stays sluggish.
That's reassuring.
Yes.
So it's a balancing act.
Yeah.
Right? You want to control costs without sacrificing the things that drive future growth.
Exactly.
What else were analysts worried about?
The other big question, and this is always looming large, is the potential impact of tariffs.
Right.
We all know they can have a huge impact on a company's cost of goods sold, and MSM does source some of its products from overseas.
So tariffs could eat into their profits even if sales hold up.
Exactly.
What's their plan to deal with that?
Well, they've been proactive on a couple of fronts. First, they've strategically built up their inventory of key products that could be affected by tariffs.
Okay.
So they've got a buffer if prices spike.
Smart move, stock up before the storm hits.
Exactly. They're also actively developing marketing campaigns to push their Made in USA product offerings.
Okay.
So, if tariffs make imported goods more expensive,
All right.
they'll be ready to position their domestic products as a competitive alternative.
It's all about having options.
Exactly.
Okay, enough about the challenge. Let's talk about opportunities.
All right. I like it.
What are some of the long-term growth avenues that MSM is excited about?
Well, one that really stands out is their continued focus on expanding their solutions business.
Right.
Remember, this is about becoming more than just a parts supplier, but a true partner in helping their customers operate more efficiently.
Think back to those implant programs and vending machine installations we talked about.
Yeah, exactly.
It's about integrating themselves into their customers' workflow.
That's a great way to put it. By providing on-site inventory management and other value-added services,
Right.
they're helping customers streamline their operations and reduce costs.
Right.
And for MSM, it means deeper customer relationships and a more predictable revenue stream.
Win-win.
Exactly.
Any other growth areas they're highlighting?
They're also seeing strong growth in sales to the public sector.
Okay.
Think, government agencies and the like.
Uh-huh.
There's a lot of potential there as these organizations look to, cut costs and become more efficient.
And MSM, with its massive catalog and distribution network, is well-positioned to help them do that.
Precisely. They understand the ins and outs of government procurement, and they can tailor solutions to meet the specific needs of different agencies.
Right.
It's a specialized market,
Yeah.
but one where they have a clear advantage.
So we've got solutions, we've got the public sector, what else?
And of course, we can't forget the reshoring trend we touched on earlier.
Right.
If this trend continues to gain momentum, MSM could be a major beneficiary.
Makes sense. If more companies are bringing manufacturing back to the U.S., they're going to need a reliable supplier of industrial parts and equipment.
Right.
Who better than a company with a long history and deep inventory like MSM?
Exactly. And their emphasis on made in USA products puts them in a strong position to capture that reshoring demand.
Right.
It's a long-term play for sure.
Yeah.
But one with potentially significant upside.
Okay.
But let's be realistic here.
Yeah.
All of this hinges on the overall health of the manufacturing sector,
Right.
which, as we've discussed, is facing some headwinds right now.
Right.
So that's the million-dollar question.
Yeah. Can MSM thrive even if the manufacturing sector remains sluggish?
Yeah. Many of their key end markets are experiencing softness, as we've discussed.
Yeah.
And this could definitely limit their growth potential in the near term.
Right.
But there are also reasons for optimism.
Okay, such as give us those silver linings.
Well, some economists are predicting a rebound in manufacturing activity later this year. Okay. And, even if the recovery is slow, MSM is taking steps to mitigate the impact by diversifying its customer base
Okay.
and expanding into higher growth areas.
So not putting all their eggs in one basket.
Exactly. It's about spreading the risk, so to speak.
Right.
And, playing the long game, positioning themselves for success regardless of short-term fluctuations in the market.
And remember, they're not just sitting around waiting for things to improve.
Yeah.
They're actively investing in those mission-critical initiatives.
Right.
That should drive growth even in a challenging environment.
Yeah. It's a proactive approach, which I find admirable.
I agree.
They're tackling those headwinds head on while also laying the groundwork for future success.
Okay, so maybe not running for the hills,
Yeah,
but definitely proceed with caution, keeping a close eye on those macro trends.
absolutely.
Now, before we wrap up, I want to circle back to something you said earlier.
Okay.
You mentioned their focus on government contracts.
Yeah.
That got me thinking, what if there's an even bigger play here?
Okay.
What if MSM is strategically positioning itself to become the go-to supplier for a massive government-led infrastructure push?
That's an interesting thought.
Right.
We know there's a lot of talk about infrastructure spending these days.
Right.
And if the government does decide to pour money into roads, bridges, airports, all that, well, they're going to need a lot of industrial supplies.
To make it happen.
Oh, they make it happen.
And MSM, with its vast inventory nationwide distribution network and experience working with government agencies, would be in prime position to capitalize on that.
It's definitely a scenario worth considering.
Right.
And it highlights the importance of, thinking beyond the immediate numbers and considering the broader political and economic landscape.
Now, we've covered a lot of ground here,
We have.
but there's one more crucial element we need to explore. What does all this mean for you, the individual investor?
Right.
What should you be watching for in the coming months? What are the key takeaways?
The big question.
We'll tackle those questions and more when we come back for the final part of our deep dive into MSC Industrial. Welcome back to Talk Tickers. We're wrapping up our deep dive into MSC Industrial's Q1 2025 earnings call.
Yeah, we've analyzed their financial performance, kind of dissected their strategic initiatives, and even pondered, some potential future scenarios.
And now it's time to answer the question that's probably on everyone's mind.
The big one.
What does all this mean for you as an investor?
Yeah, it's a complex picture for sure.
Right.
MSM is a company at a crossroads.
Okay.
They're facing some serious headwinds, like that softening manufacturing environment that we've been talking about. And,
Right.
the specter of tariffs always looms large.
It's always there.
Always there.
But they're not just sitting back and taking it.
No.
They're actively working to mitigate those risks
Yeah.
through things like strategic inventory buildup and promoting their made in USA products.
Right. And don't forget about that, ambitious mission critical program.
Right.
They're investing in those customized solutions for businesses, expanding their public sector sales.
Right.
Trying to revitalize their core customer base.
It's a lot.
It's a lot of moving pieces.
Yeah.
And these are all smart moves, but, they take time to pay off.
It's like they're building a bridge to the future.
Yeah.
But they have to navigate some rough terrain along the way.
A great analogy.
Right.
So, if you're looking for a get-rich-quick scheme, MSM is probably not the right play.
Okay.
But if you're a long-term investor, willing to ride out, some potential volatility,
Right.
there's a lot to like here.
Okay.
They're a well-managed company with a long history of navigating economic cycles.
Right.
And if their mission-critical program succeeds, it could really unlock some serious growth potential.
So it's all about weighing the risks and the rewards.
Exactly.
Like on the risk side.
Yeah.
You got the uncertain economic outlook.
So
The potential for tariffs to disrupt their business.
yeah,
And the execution risk associated with any major strategic overhaul.
it's a lot to keep in mind.
On the reward side, you have a company that's taking proactive steps to control costs, diversify its revenue streams, and position itself for long-term growth.
Right.
Plus, they're a potential beneficiary of some major trends like reshoring and infrastructure spending.
All very important things to think about.
So is MSM a buy, a sell, or a hold?
That, my friend, is the million-dollar question.
It is.
And it's one that you'll have to answer for yourself based on your individual investment goals and risk tolerance.
As always, we encourage you to do your own research. Dig into the details and make informed decisions.
Absolutely. This deep dive is just a starting point, not a definitive investment recommendation.
Now for something completely different.
Okay, I like it.
It's time for our This Is Not Financial Advice segment, where we throw out a totally outrageous but plausible trade idea.
Yeah, let's hear it.
So imagine a world where tensions between the U.S. and China escalate, at the point of near total decoupling of their economies.
Wow.
Supply chains are disrupted, tariffs skyrocket, companies are scrambling to secure domestic sources for everything.
Chaos.
Chaos reigns. And amidst all this, one company emerges as a beacon of stability and resilience.
Okay, who is it?
MSC Industrial.
Oh, wow.
Their vast inventory of made-in-USA products suddenly becomes incredibly valuable.
I see where you're going with this.
Their nationwide distribution network gives them a logistical edge. And their expertise in serving both the private and public sector makes them the go-to supplier for everyone, from small businesses to the Pentagon.
Interesting.
The stock price explodes
Of course.
as investors pile in, desperate for exposure to this reshoring champion.
Reshoring champion, I like it.
So the trade is buy MSM, now holds for 5 years, and then
retire to a private island.
I remember, this is not financial advice.
Of course not.
We're just having some fun here.
Always good to have some fun.
But it's always fun to speculate about the future, right?
It is. It keeps things interesting.
Who knows? Maybe this crazy scenario isn't so crazy after all.
You never know.
All right, that concludes our deep dive into MSC Industrial's Q1 2025 earnings call. We hope you found it informative and engaging.
Thanks for joining us on Talk Tickers. Be sure to subscribe to our channel for more in-depth analysis of earnings calls and other market-moving events.
Until next time, happy investing.